We've got Pankaj Mital, Chief Operating Officer and CEO at Samvardhana Motherson, joining in on the show. And we also have Kunal Malani, the CFO at SAMIL. But Kunal, if I could start off with you, your results have been very strong. You also reported better EBITDA margins too. We've seen an improvement in the ROCE as well. Do you think this kind of a healthy return ratio is sustainable?
We really do not talk about on margin basis, though we have to report it on margin basis, but we really talk on ROCE basis. Our targets are the 40% ROCE. Happy to report again that we have continuously improved where we are right now. From last quarter to this quarter, we had said 16% last quarter. We had moved that to 17. So we are on an improving trajectory, and it's a continuous improvement path. So we do believe that growth profile that you have seen, even in a relatively challenging environment as it has been in the last few quarters. So overall, I think the business is well positioned to continuously improve from here on.
Right. So, Kunal, while your leverage ratios are well within the desired range, let me bring focus on the finance cost, because that component on a year-on-year basis has gone up significantly. What has led to this increase? How should one really read into the number?
So part of it is driven by the fact that in Argentina, there was a very substantial depreciation of the Argentinian peso. So if you look at March to now, Argentinian peso to a dollar used to be around about 200. It is, as of December, closer to 800. Now, in a hyperinflationary environment, the regulations there required that you could not make any payment to suppliers, the imports that we were doing in Argentina. And hence, we had to book a non-cash element in our finance cost to do the mark-to-market on these payables. So that's what you're seeing as a big element. If you would have seen our presentation, it talks about a 190 crore number, where around about 70 odd crores is part of EBITDA and the remaining 120 odd crores is part of the finance cost. The other piece of increase is driven by the increase in the interest cost itself, as some of our earlier debt comes for refinancing. Obviously, the older cost debt has been refinanced with a higher cost debt now, given just the sheer interest rate environment that exists. And hence, you are seeing that increase in
80% of the wiring remains low voltage, and only the engine side goes away. So there are converters, inverters, and high voltage systems which come in that place. Most of the profile of our business is powertrain agnostic. So whether it's an EV car or a non-EV vehicle or hydrogen vehicle, all our products exist. So we are in a very unique position, in a very positive position, that whichever way the market goes, and many different types of powertrains will keep coming in, we would be there, and our products will continue to exist and continue to grow.
Sure. Pankaj, lastly, on a macro level, India's four-wheeler market is already at a high base now. Premium market is also on the rise. What's your outlook in terms of the growth momentum with the uptick in the luxury segment cars? How do you think it's going to impact your profitability?
I would say you have captured the market very well and understood as to where it is going. This premiumization is happening at the moment and will continue to happen. And this definitely helps us to provide more to the customers. If you see all the acquisitions which we have made, we acquired the technology. We have our own know-how now world over. So we do supply to the premium car makers around the world. And that's what we are bringing to India to provide to the car market in India. And we will be at the forefront to support our customers in this journey. Many of our greenfield sites which are coming in the coming quarters and year, they're all coming up in India. So that also showcases, as our car makers are invested, our customers are investing in India and growing their capacities to produce more and more vehicles. We are there to support them.
All right. Good to have you on board. Thank you so much, gentlemen, for joining in and sharing with us those insights. So yes, they are looking at premiumization that will continue to happen, eyeing an ROCE of about 40%. Let's move right on.